startup pitch is basically a presentation that you have to take to the investors. When you are going to meet investors, you're not just going single-handedly. You actually have to prepare a presentation, and you only have a limited time to pitch your startup to them. So you might have 5 minutes, sometimes you might have 10 minutes to pitch your idea to them. So startup pitch is basically a very specific compilation of the things that you need to mention to the startups. So it's basically what you do in your startup pitch is you take your business model canvas and then convert it into the startup pitch. Again, the question that you are going to answer in the startup pitch is, again, what is your idea? What problem are you solving? Who are your customers? What's the market size? So you actually have to put some numbers on the market size in there as well. And then once you have developed, mentioned about the market size, you talk about, okay, this is the particular market size. Now, how are we going to reach to those people? So, for example, if you say, oh, I've developed a nice application and my market is all the students in India. The next question that investors would have is, how are you going to reach to all of the students in India? Because if you try and spend money in marketing, you might end up spending millions of dollars just trying to reach out to the people. So you need to have a nice channelized strategy to reach out to the students. Would it be through campus ambassadors? Would it be through partnerships or collaborations? You actually have to clearly specify that. And the most important thing in a startup pitch is the revenue model. So how are you actually going to make money after 2 years or 3 years or whenever? What is your revenue source? Are you going to charge students? Are you going to develop a marketplace and then charge the suppliers? If you say my revenue model is advertisement, now advertisement could be a revenue model, but for that to work, you actually need to have a huge amount of traffic on a particular application or a particular website. So you need to think about different revenue models. And then the most importantly, what is your exit strategy? So if an investor is investing in the startup, they are looking for an exit strategy because they want to get a return on their money in 5 to 6 years. So an exit strategy could be an IPO, which is initial public offering, which means listing your startup on a stock, on a stock index like NASDAQ or NSE, or in India, the Bombay Stock Exchange. And then the second is actually selling it to or getting acquired by a larger company. So, for example, if your startup is in health sector, what are the companies that could actually acquire it? For example, if your startup is in like photo sharing sector, do you see Facebook or Instagram acquiring it as well? So you actually have to mention what is your exit strategy. If you go to investors and tell them that I do not have an exit strategy, like I'm going to continue with my business, it won't work. It doesn't work like that. They need to see a proper exit strategy, and they need to see that they will get a return on their investment in 5 to 6 years. And that's pretty important. So we have got